What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Supermicro Computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Wednesday, March 13th. Alright guys, quite the day here for SMCI stock. It's up $82.78 a share. That's plus 7.66%. It is up about another 6 points or so in the after hours, which is not a tremendous move for a stock like SMCI. But listen, as always, whether it's going for you or against you in the after hours, always take it with a grain of salt, unless there's a business-specific catalyst in the after hours that's pumping up volume, because you can see here volume is incredibly low. So, listen, if you're a bull, rather have it be up than flat or down, but take it with a grain of salt. Now, of course, throughout the AI sector today, at least the majority of it, a lot of stocks are moving. Last night, we got Oracle's earnings, got a bit of an upside surprise there, showing that, demand for AI products is spreading wider and getting thicker, which of course helped to assist the sector higher today. But let's get started here with our daily ritual, the volume profile analysis here on the 5-minute chart. Why are we doing this? Well, we're looking to pull out any bigger sample size bias that isn't obvious through the price movement itself, okay? By the way, if you have not done so already, please subscribe to the channel. I greatly appreciate it. My goal here is to hit 5,000 by market open this coming Monday. I think we can do it, but not without your help. So jump aboard. I appreciate it. Now, the volume profile. In order to pull that bias out, there's 3 things I need. I need an obvious change in the volume profile itself, okay, in comparison to what's around it, really. I need that to correlate with an obvious change in stock price, which we'll circle here in a second. But both of those things have to be, or more so the volume that correlates with the move, has to be out of context for what is typically expected at that time of day. Otherwise, it doesn't really tell us anything meaningful at all, because it's really not any different than the average day, right? So if we look here, what were the most obvious moves, at least during the intraday session, during regular hours? Well, for me, I'm most interested in this kind of sustained upside push, this fade that shortly followed that. And that's really, we could circle one of these, but that's really about it. So let's take a look here, starting from left to right. That sustained push that we got shortly off the open. Of course, that first candle off the open is almost always, on most stocks, going to be, not almost always, very often, is going to be the biggest volume candle on the day. Then we typically expect kind of a U shape, right? The close actually surprisingly a little bit low volume today, which is interesting. But during this push, honestly, had we seen 3 candles, 4, 5, 6 green candles in a row that saw 120,000 or 140,000 a pop, with a little bit of variation, of course, that would be very definitive. But honestly, with these few candles that pop up, the small outliers, whereas the average of the trend, when you pull those out, is so contextual. Bulls, I'm sorry, there's just nothing I can pull out of there. As far as you bears are concerned on this downside move, some might argue that, oh, look at that, we got some red popping. Listen, there's nothing contextual there either. We had, again, 3, 4 in a row that popped to 75, 80, 80,000 shares apiece. Well, then that would be so obvious it would stick out like a sore thumb. But truthfully, there's, bears, I wish I had better news for you guys as well. There's just nothing there. And then this pop, we did see a little bit of increasing volume, but truthfully, 2 candles in a row, which was why I was hesitant to circle it to begin with, just it's not enough. There's too much potential randomness involved. I like to take that completely out of the picture with maybe 3, 4, 5 or more candles in a row, really telling us what's going on there from a big sample size perspective. Now, if we just zoom out and take a look and compare this to yesterday, we did see really similar volume actually, with a little bit of a flip from that early morning volume from red yesterday to more so green side today. But aside from that, that's really about all I can pull out of this volume profile. Doesn't make it meaningless, by the way. It just gives us an interesting insight to compare future days to when something that's incredibly meaningful does come about, which typically does happen. So let's move on to levels now, starting with the incredibly relevant 30-minute chart, looking at the psychological self-fulfilling prophecy levels that can help us get a gauge on where's the psychology at on these stocks here, SMCI in particular, as we move forward. So in last night's video, if you caught SMCI's video last night, we were talking about how these moving averages on the 30-minute, again, the most popular ones, those are the only ones I'm interested in, the 50 period and the 200 period, they were coming together very aggressively Okay, and that left the bulls in an interesting position to try to overtake both of those in a single day, which we did today. In pre-market, we cracked both of them, okay, off of the CPI. But I like to see intraday tests, right? That's when the real volume comes in. And look, we opened higher above those two levels, but we tested both of them intraday and respected them and took off to the races. I mean, that is just a beautiful reclaim, retest, respect on big volume as we pulled back away, and still relatively high volume as we made that pull away. That's a beautiful sight on the 30-minute chart for bulls here today. Listen, tomorrow, bulls, ideally you guys would like to see a continuation of that 50-period curling back upside and heading higher to get some feet up underneath this move, as I always say. We currently find ourselves in a position where we're about, we roughly measure this, 4.75% downside move away from a retest of that. So, you wouldn't necessarily want to retest just that 50-period curling upside and getting up underneath the move as quickly as possible. Bears, aside from a clean downside break of both of those and reclaiming them as resistance levels, seeing that 50-period just flatten out and claim as little upside movement as possible is kind of your best case scenario, at least on the 30-minute chart in particular tomorrow. Now, moving on to the 4-hour chart, let's see if this one is in play. And it somewhat is, but let's just take a quick look. Last night, we were talking about this 50-period on the 4-hour chart, a heavily watched level. And today, we put a little bit more distance, of course, in between the stock price and the 4-hour while it made some upside. That's a good thing to see if you're a bull, because that 4-hour, or the 50-period more so on the 4-hour chart, we expect it to move a little bit slower. It's a longer time frame. So that being the case, we have to be patient with these levels, but still, if you're a bull tomorrow, really all I'm looking at on the 4-hour chart here on SMCI is for continuation upside in the 50-period, just reclaim or claim more so to the upside as much ground as possible. Just add that additional downside psychological potential protection, and I'm thrilled. That's really all we need here. Okay, at least, I'll be happy with that on the 4-hour chart here tomorrow if that's what we end up seeing. Bears. Okay. You can't ask for too much, downside curl in the 50-period because, again, it's a slower adjusting moving average. But listen, great scenario for you guys, aside from completely cracking to the downside, that 50-period is a flattening out of the level, not claiming very much more, upside. Okay, just leave a big gap, right, so that you can have your peers looking at this and saying this thing's floating on thin air, not a lot of downside protection. That's if you're a bear here tomorrow. All right, now on the daily chart, this is going to be the most important chart. You can see here that all-time high is at 1229. You can see here that those moving averages are completely irrelevant, aren't they? I mean, they're both below $700. The 200 period's below $400 a share. Not relevant in the short term, at least hopefully, right? So now we're forced to look at, well, what's the obvious story? Because this is the most popular chart on really any stock in the world, the daily with these two moving averages. And they aren't relevant. So what's the popular opinion? Or story more so? Well, it's going to be psychological round numbers. Now understand that this is the daily. It's not going to show after hours movement. But tomorrow, I think a lot of the bulls, being that we're in a position right now that each $100 round number, based on the volatility we've had recently in the name and the price point, is kind of like that next psychological level. We're at a point now where the bulls are looking at $1,200 on like a day-to-day basis. Right? Listen, bulls, a reclaim of $1,200, and I'm not talking for 4 minutes, right? Get up above, spend a lot of time above there intraday with a lot of volume flowing in. A test, respect, fine. Closing above 1,200 is a beautiful sign, as long as that didn't occur in the last 2 minutes of the trading day. That can give us some potential support to utilize 1,200 as a kind of trampoline to push us with a high volume move up toward that next level of 13. Take out the all-time high in the meantime. I'm looking at, I'm not really looking at the all-time high. I'm going to consider it as we approach it, but I'm more interested in $1,200 and $1,300 a share. Bears, $1,200 is your enemy. Any test of 1,200, you're going to want to see that hold as resistance and rejections on high volume. I don't care if we test it 17 times. Reject on high volume every time. Eventually look to fade back down toward that $1,100 share level. Best case scenario tomorrow, a reclaim back below $1,100. Now, implied volatility here, very important. It's sitting in the, I'd say, mid to high range of what's, compared to the last couple of months here of trading. Just understand, the higher IV goes, the higher the potential of IV crush. The lower IV goes, the more favorable conditions are for new options buyers to come in and purchase new contracts. Now, my favorite part of the video every single day here on Super Micro, the options chain. What was the trader's bias today? How did they position themselves today heading into tomorrow? So we had 156,000 total contracts traded. On SMCI, you know, that's a pretty decent sample size. We can get some decent data out of there. 91,000 of those were calls and about 65,000 of those were puts. So we are seeing an overall call side bias, okay? However, if we break this down by time frame and look at the delta ranges, listen to this. Every single delta range is leaning call heavy except for the short-term speculators, the 0 to 20 delta range. We have about 29,700 calls in that range and about 40,800 puts. That is the only delta range leaning a little bit put heavy. But even with that being the case, again, that overall ratio is call side heavy. Listen, if you got value out of this video, again, please subscribe to the channel. Help me reach my 5,000 goal by Monday market open. I appreciate you, and I'll see you in the next one.